Where do you exit your trade after a successful breakout? Hey, very good evening to you traders. This is Mark. Welcome to your daily trading video. Obviously Fed today, US dollar yen in play, Dow obviously in play, usual suspects. But what I got to looking at, and I've been looking at this for a long time because this is actually a little bit of a weak spot of my own trading, is how do you trail a trade to go with the trend? You know, if you're in a breakout trade, or if you've bought the low after a little spike lower, or whatever it may be, you know, I'm not going to talk specifically about the entry right now, but you know, where do you come out of the position once you're on the end of a decent move? You know, that's always a challenge. Now, the obvious thing is, you know, when you have bought something, let's say you've bought a double bottom or you've bought a breakout, that doesn't really matter. You know, you're going to scale some of the position out as it goes in your favor. But for that ultimate trailer, you know, if you're on the end of a trend that's moving nicely, how do you manage the position? You know, where do you come out? The obvious thing might be, you know, under a previous support or something. But when you've got a grinding day like today, because we had it in the Dow after the Fed, we had it in the DAX earlier at lunchtime, we had it in some of the currencies, so it happens really, really often. One thing I looked at is using a sort of standard. I know this is very, very textbook, but actually, you know, it works okay if you bolt it on top of your standard kind of trader's entry. So I'm using a 10 period moving average here and a 20 period moving average. It's really very, very simple. But the theory is basically, listen, if you're on the end of a trend and the market's just chugging in one direction, it's just going to keep chugging until there's a decent force applied in the other direction to stop it from moving. And it's very difficult. You don't get those pulses to the upside that you often do with rotational markets that allow you to take, you know, scale off positions. It rolls back down, pulses back up, you scale off. You don't get that. You just get a plod, pull back, plod, pull back, plod, pull back. And what I've noticed is that the 10 period and the 20 period often is a very good way of staying with that position on a day trading perspective. So if you had bought a breakout, or if you were good enough to have bought this low here for whatever reason, look how long that kept you in that trade all throughout the afternoon. It didn't take you out until, in fact, you'd come out of the close, obviously, but it's kept you in for the whole of the move, despite it actually chopping around for a good 15-20 minutes and doing nothing, despite it pulling back a decent amount. Now, one thing you can't do with this, you can't really quantify your risk. Now, obviously, if you've taken a breakout here, you've got to accept that for that to roll over here, for the moving average to cross over there, the price could go lower here. So there's a little bit of flexibility and a little bit of range in terms of how much monetary risk you're going to take, but it's a good way of keeping you in the position. And I'm always looking for little methods of doing this. Now, it definitely doesn't work in every market. If you try and do this in a choppy market, you're just going to get killed. If you're taking a trade when it's way outside of the moving average, you're already offside in terms of how far away it is from the crossover point, and then when it comes back, you know, you may well be severely down. So it's only a trending, choppy type market. So we saw it work quite well in the afternoon on the Dow after the Fed. That's what you want. You want something where it's just plodding along. And the same with the DAX. DAX started to roll over just after lunchtime. We had a peak, we had a rollover. Again, whatever your reason for taking the trade is, that's not really the part of this. This is about getting hold of the meat of the move. As you start to roll, look how long we go before we end up crossing the 10 period, crosses the 20 period moving average. You know, that gives you the whole of the move. And okay, appreciate that we're looking at stuff in hindsight here, but if it allows you to sit through all this stuff that normally you would think, well, I might take it off here because we're not going lower, and it allows you just to stay with it, and then you get the last little bit of the move. And also things like crude oil. Crude oil was up pretty strongly today after the Fed. Same type of thing. Once it starts plodding in trend mode, then activate this as like a kind of trailer. So whatever your reason for your entry was, you're in. And look, it's keeping you in the position all the way through. It's not giving you any reason to come out. In fact, you can just set an alert on most of your trading platforms and then forget about it, and then just wait when it fires off, take off your position as your final targets. Same on the pound dollar. After we sort of chugged into trend mode, we were off. US dollar yen was a little bit different, but ultimately, okay, not quite as clean cut, but let's look at an example that's not quite perfect, because trading is not always perfect. When you're involved in this, look, Okay, you get taken out there if you took that on, but ultimately it keeps you in right the way down until we start to sort of make a little bit of a bottom here and push back up. So you're not coming out too early, you're holding on, you're giving the market chance to break out, and if we did suddenly break out and sort of run down to the 100 and run further, you're on the end and you've got a nice cushion of a nice move. So just one idea, it's a 10 period moving average and a 20 period moving average. Doesn't obviously work in all markets, but a good way of trailing that position that you've got a good entry on to extract as much juice as you can out of the trade. Anyway, had a great day today trading, guys. Take care. Back with another video tomorrow.